Now in this segment, we're going to go deeper into the global markets. And when you look at the global markets, we really have to start with Russia and how things have changed, how they've stayed the same. So there's been a delay to the cap, which if you've been watching us, what we've been talking about, we expected to see a delay in that getting passed because, again, you need all 27 EU nations to approve it, and it was unlikely to get approved as it was, given the pushback that you were going to get from Hungary and some other areas within Eastern Europe. But even with that happening, you can just look at the 4-week average crude shipment from Russia has been diminishing because, again, demand has slowed. And as demand has slowed, well, even though you have a discounted sale of cargoes, you really don't have a huge amount of appetite just given where things are as you start to take down. And it also takes a lot of time. You're traveling a fairly sizable distance from Russia to India by waterway in order to get that crude into the market. So that's why India's, again, diminishing a bit. It'll stabilize. We're not saying that it's going to go back to where it was before the invasion of Ukraine, which was, when you look at it, 700,000 barrels. It's something where between that 1.5 and 1.8 million barrel a day is, I think, going to be that kind of steady state when you look at Russia needs to move the cargoes. They're going to do everything they can to move the cargoes, and they're going to have to, again, move it into that market. Now, this could go higher if we do get that cap rate, that cap implemented. And if that cap does get implemented, that'll free up more countries to purchase, which will move this back up. So Russia's seaborne crude exports to Europe are being compressed with the sanctions only about 2 months away. Shipments in recent weeks have been a little more than half of pre-invasion. Customers in Northern Europe in particular have slashed their imports, which are now running below 300,000 barrels a day. So as that happens, they have to, again, move it somewhere else. But it's Northern Europe and Europe in general is also, you could say, well, they're doing this because they're against the Russian actions, but there's an economic problem. There's a availability of natural gas and natural gas and electricity for the refiners. So that is also hindering some of those things. And then when you look at Nord Stream 1, Nord Stream 2, there was that massive gas leak, which resulted in the shutdown and the damage to the pipeline. Now, was it sabotage? Was it an accident? Was it... again, we can leave that to another day and another discussion, but regardless, you're now seeing the pipeline officially taken offline just because the damage has to be assessed. It then has to be fixed. Can Russian assets get to it? Can Germany get to it? There's going to be a lot of unknowns around this, and we just want to bring it up while we're talking about Russia. But this is something that we're going to want to talk about, and we will talk about more during the FSC show, looking at some of those shifts in terms of natural gas by pipe, LNG by water, and how that is setting up as we progress into the winter months. Because just based on conversations we've had with some buyers and some activity in the market, is right now there are no LNG There's no term contracts for LNG available as we are heading into the early parts of the winter. You can get it. It's at a steep discount, but that's where the spot market is going to come in. And so far, there is a growing shortfall of available LNG cargoes. Russia's crude shipments to Europe. This is what we were talking about, where things are fairly stable in both the Mediterranean and Black Sea. The drop is really being driven by Northern Europe. It'll stabilize here because we did get refiners cutting runs. We did get a slowdown in activity on an economic level, but also the cut in runs was economic in part due to natural gas and electricity. So here's where we think the steady state is going to be as we progress forward. Then when you look at who is importing it, you can see that it still remains Germany and Poland. Hungary is obviously another big piece of it, but that has dropped off, and you can see the steady state nature of it. And then the Mediterranean customers still remain Turkey and Italy, and we don't see Turkey and Italy really be stopping at this point, especially Turkey, just because they need some sort of ability to produce, to keep things moving. Kazakhstan, though, when you look at CPC, they're saying that the two closed moorings will be open by the middle of October. And then Kazakhstan has said it'll take about 3 weeks to get the field back to operating levels. So that would be a way to displace, especially coming into the Mediterranean, ways to avoid purchasing of Russian crudes, buying more CPC, Kazakhstan crude. And that's going to be an interesting one to watch because you still have that court case waiting in the wings where Russia is claiming that Kazakhstan hasn't paid, that they haven't been, then they could, in theory, shut down their ability to get it to the port. Now, when you look at Russia's Asian customers, you can see that India is obviously slowed. There's that timing delay. China, fairly stable, come down a bit, and that unknown is growing because they're trying to. If you just think about timing, so Russia knows that Asian buyers are going to be there, so they're trying to push some of it to preemptively into the market so that when the sale closes, it's already closer, and try to speed some of that up and close that gap because miles per ton continue to move higher. So these are all things that are so important when you're looking at the movement of crude. And then when you look at the pipeline puzzle, so as you've lost Nord Stream 1 and 2, and obviously 2 had never come on, but with the leak and whether it's what you want to call it, of sabotage or accident or a mixture of both, or most likely a sabotage event, there's still other ways to get gas into Europe. And the question is, which one makes the most sense? Is there ones that would be possible just given where things are in terms of Turk Stream, Blue Stream, and some of those movements? So there is that ability to move some of that through, but the expansion points, the new pipelines, it comes down to, is it completed? Is the Ukraine going to allow this natural gas to move through its system? Belarus is obviously Team Russia, but what is Poland going to do? Are they going to push this back? But do they need it? When you look at what Hungary is consuming, what Poland is consuming into the refiners, and this is going to be some of those interesting pivot points. Now, when you look at U.S. exports from the crude side, and we wanted to pull this forward because you had a big spike from 3.54 million to 4.6. And again, some of that 4.6 is a makeup number. We still have this at about 3.7, 3.8 million barrels a day. And when you look at that 4 week rolling average, we're right in that level. And again, as that Russian crude comes down from Europe, they still have to replace it. And that is where the U.S. is fitting in. So between CPC, CN, Libya, U.S., and what can move from both the Middle East and West Africa is, again, targeting Europe. And the U.S. is a big component of that, and it will remain so as we go through the remainder of this year at least. Then when you look at the Middle East on the floating storage side, it's above 2021 levels. Again, there's still a lot of crude in the Middle East because they priced themselves out of the market, which is why we do expect to see another cut to OSPs because they would want to bring this back down. And given what is happening where now you have unknown, quote unquote, unknown buyers of Russian crude going into Asia, a lot of that is preemptive, trying to get it in there. So there's going to continue to be that Asian buyer moving towards the Russian cargoes, and the Middle East is going to have to become a bit more competitive. Especially when you look at how we're now at about 470, 580 is kind of the range that we're living in between Dubai and Brent, and we don't see that changing. When you look at Brent, so we'll talk about it in a minute, but there was a lot of deferred cargoes in Europe from October into November, and when we saw some additional deferrals from October into November because October was a fairly slow month, November picked up a bit, so we did get more activity in November, but it's still not on a very rapid basis, and that's where we want to look at what is November going to do, and in order to be competitive, that is where we think we're going to get a bigger cut. Now, crude oil on the water back to all-time highs, taking out the highest for 2022. And a lot of this is being driven based on the amount of crude in floating storage, but more importantly, what is in transit. And this is also coming back to what is happening with Russia. So here you can see that there is a massive amount of crude in transit. Again, miles per ton, more cargoes moving at the same time versus normal. But a lot of this has been in transit, and now it's coming to sit on offshore. Floating storage, the highest it's been in 2022. You can see it is matching the 2021 levels. And as we were saying, we expected it to match 2021. We expected it to move in a fairly similar way. We don't think we go much above 2021. Because they're starting to see those movements of again increase when you look at China's increased exports of refined products 1 million increasing it to 1 million barrels a day. I should say an additional 1 million barrels a day to try to get some of that product out, allow refiners to run at a higher rate, pull in a lot of this excess crude that is not only in storage but in floating storage, and try to capture some of that margin, which is why it's not surprising to see Asian floating storage spike so high. And we just based on what has been purchased and that timing delay, we expect it to continue to trend higher and really come back to where we were in 2021. And again, as you can see, we're at the highest level for this year. So when you look at Shandong independent refiners, you had a small increase. We're now at about 64% utilization rates. We expect this to get to about 68%. But it's really targeted at getting the large privates, but more importantly, the SOEs back and operational. So that's where a lot of that the target is for the Chinese government, because there has been a lot of pushback on the economy and the hit these guys have taken because of these onerous export restrictions, which is why you saw a certain amount of that yield, especially ahead of the Communist Congress, which is happening next month, because Xi wants to be on everyone's good graces as he goes to be for a third term, which would be, again, a historic event. So these are key pieces that we have to watch. And that's why a lot of this is going to be targeted at the SOEs, the large privates, and increase a lot of those different pieces. So then when you look at West Africa crude oil floating storage, here you can see that the floating storage has moved up. And again, it's going to remain elevated. It's not going to be where it was just because they are more competitive versus the Middle East. So if you have an option of, am I moving West Africa? Am I moving the Middle East crudes? What am I buying? West Africa is still going to be the preferred just based on price. So again, that's going to keep this elevated, but not to the same level in which we've seen, as it remains a bit more competitive moving into the market. And then this is what we were talking about, where we had that increase in supertanker activity coming down to the average. But as this shows up, which it will show up, some of it already has, some of it will, and that's going to, again, move things in that direction and keep some of that pressure on not only the floating storage, which is why it's so important for China to continue to increase runs and try to alleviate the pressure offshore and move some of that onshore. When you look at product exports, gasoline dropped 204,000 barrels a day, still well above the 5-year average. Distillate dropped 471,000 barrels a day, still above the 5-year. And then when you look at propane, still very strong, 450,000 barrels above the 5-year, 285,000 barrels a day above the year, week on week. Again, the LPG market's going to stay strong, but we are getting way more pressure on local demand because we do have shoulder seasons. So you have slower demand because of that, but you also have a massive petrochemical slowdown in terms of run cuts, in terms of demand. So we are seeing a lot of that, again, pivot and continue to support that offshore flow. When you look at gasoline exports, coming back down, we expect it to be in the top end of the cloud, either making a small seasonally adjusted high or right at that top end as things continue to progress. On the distillate front, again, we still see a lot of exports going into Europe, so it will stay above the 5-year average and at the top end of the cloud, just as PADD 3 tries to manage their storage. And again, the margins remain so robust going into Europe. Ethane exports, again, going to stay fairly strong just because we do have less demand internally because of cut in runs on the and utilization rates on the ethane crackers. But again, that's going to continue to be fairly stable and fairly elevated. And then, as we said before, crude oil, that big spike, still too high, but there's a certain amount of that makeup number, and we still sit about that 3.7, 3.8. With propane, still seasonally adjusted all-time highs, and just given pricing, given demand abroad, that's going to remain the case, especially as countries look to address shortages in LNG, shortages in piped gas, shortages in distillate and fuel oil. And LPG is very flexible and, again, fitting into that mold. Now, when you look at inventories in Fujairah, you had a big increase. So there were the total increase, the total level was 24.559 million, which was a build of 2.551 million week on week. The builds were really across light distillates and middle distillates. So light distillate rose 929,000 barrels to 7.404. The East of Suez gasoline complex slowed down with an industry event leading to thin activity. Fresh statistics, India's domestic gasoline production fell 9.54% month on month and was down 6.5% year on year. So again, the decline is there. It's, as we were saying, light distillate is going to be fairly stable. We did see more gasoline demand in Asia than what we were expecting, which is, again, keeping the East of Suez open, while West of Suez is just flooded with product. But as you get that Chinese movement, that's going to, again, push Singapore back to new all-time highs in terms of what's in storage, and we will see the slowdown. So we do expect to see a fairly sizable increase in light distillate storage in Fujairah. Middle distillate rose 1.721 million barrels to 4.706 million. This is the highest level since the start of February 2021. They were last higher on February 1st, where it was 5.17. The East of Suez gas oil complex was finding support from some opening arbitrage of sending ultra-low sulfur barrels into the Arab Gulf to Northwest or the Mediterranean. So this in turn could open up that east-west arbitrage that we were talking about. And again, as that Chinese product makes its way through Asia, that's going to push back into Fujairah, which is then going to be able to send more into Europe. And that's where we're going to see this path. But it takes time. Again, then that's where we're going to see some of those builds as less product goes from Fujairah into Asia and more into Europe. Stocks of heavy resid fell by 99,000 barrels to 12.449, so fairly stable. Spot trading activity was better than average for the second trading day, but again, just based on the slowdown in underlying activity on the shipping front, we don't see too much changing. In the Brent spread, it's right now sitting at about 1.37. It'll move up a little bit, but we see that a pretty heavy floor at about $1.5. Just given the issues in terms of the deferrals out of October into November, we did see some price increases, but no buyers. So that's where typically as you get to the first week of the new month, as we head into October, guys try to start at the highest price they think the market will bear, and then slowly walk it down to try to get the best price. So when you look at just where flows are, Norway, there's the Johan field is now setting a record for the highest output since the field started in 2019. Russia Federation, moving at about, let's call it about 3.6, 3.7 million barrels a day. Angola, over 1 million barrels a day in exports in November. Nigeria, we should see something close to that in terms of about 1 million. When you look at Libya, we expect to see it about 1.1, so nothing too crazy there. And then when you look at Congo, We did get a small deferral, Angola, Nigeria. Nigeria had some sizable deferrals, but we did get more activity in November. So again, that should just be a little bit of a wash. So when you look at it in terms of what happened in September, 48 cargoes of crude were due to load for Asia, equating to about 1.48 million barrels a day. But that is still down versus August of 1.53 as we continue to see that slowdown, with all of it really being driven by China, because shipments to China declined to 735,000 barrels a day, which was from 916,000 in August. And that is just based on local slowdown as well as more Russian cargoes. Asia's share of Angola's exports declined to 62% in September from 73% in August, and the 12-month average is 75%, which is why we're saying that West Africa just isn't going into Asia the same way, so they have to be more competitive to come into the U.S. and Europe. Exports to China to India remained elevated. There continues to be, they're trying to take the opportunity to buy the most that they can. And there was pricing that supported it as China slowed. As there were more cargoes available, India stepped in. When you look at what is happening now in the north, in Europe, Troll, Gulfox, Sarg cargoes for October were deferred. Norway's energy firms are boosting security at their facilities following a suspected sabotage, again, in Nord Stream pipeline system. So you have a lot of those movements. And then when you look at Johan, it pumped a record in November. Loadings to jump to a record of 587,000 barrels in November, while you have a significant amount of deferrals out of October. So then when you look at some of the recent pricing, Tatsa put a bid out there, an offer out there for $2.35 plus dated Brent. The previous offer was for $1.40, but again, there was no takers. So start high and start to walk back, which is what we think is going to happen. While Kazakhstan's field will need at least 3 weeks to fully restore oil production, all CPC moorings to be operational by October 15th, which would be a fairly good movement in terms of where that cargo can flow and repair some of the damage and provide Europe with other optionality. So when you look at what is happening in Europe on a storage side, it's right in line with kind of that 10-year, 9-year average, and we're right at where we were in 2021. We don't see too much movement up or down. We should get a little bit more build here, but again, the refiners are not really operating, so that'll keep things moving into storage. Now, when we look at flows in terms of refined product into Europe, gasoline had a small draw, as we talked about last week on the FSC show. Gas oil, small build. But then when you look at gas oil, even though it's building, it's still the lowest it's been since going back to 2007. Going to be a very difficult time, especially as we obviously head into the winter months. And if it is cold in any shape, way, or form, there is going to be a lot of trouble. Gasoline, it's at the 2020 levels, so still right at all-time highs. And just given some of these shifts in some of that movement of reopening of the spread and the ARB coming into the U.S., that should put a little bit more gasoline on the water, which should move this down a bit. And the reason why is because exports will increase, refinery runs have come down, which will enable additional flow. And then when you look at fuel oil, still elevated right at 2021 levels. And as LNG continues to be expensive, as ultra low sulfur gas oil remains expensive, we do expect more fuel oil again to head into the Asian markets. Then when you look at Singapore had a sizable build from 43.5 to 47.1. So when you look at total weekly fuel stockpiles, it's the highest point for 2022. So again, there's still a significant amount in Singapore, and as China exports more, we expect this to grind much higher, especially in the light distillate and resid side, with resid really being the driving force for what we saw. So here you can see that that the light distillate side is right back to where it was in 2020, still near record all-time highs. As more product gets exported, we expect this to remain very elevated and set new seasonally adjusted highs. Middle distillate side, still second lowest it's ever been, as that product comes from China. Even though it'll come from China, there'll still be more. We're still at such a low level that as it shows up, it's just so much, you're so low against historics that you're still going to see the pressure. But as China exports, that's going to put pressure on crack spreads. So again, as crack spreads slow and as the pressure comes, because gasoline's already negative, diesel and distillate is the only thing really supporting you. So as China shows up, as the distillate crack falls, and as, again, between the distillate crack, gasoline crack coming down, that's going to put more pressure on pricing, and that's going to reduce runs. And by doing that, you're going to reduce the amount of oil that's being consumed and demanded. When you look at resid is back to a 2022 high, the highest for the year. And this is going to, again, it's going to be a matter of pricing of how much of this moves back into the market as ultra low sulfur diesel gets priced out, LNG gets priced out. We are in the shoulder season, but as we move further into the winter months, we should see this start to get consumed. North Sea floating storage is fairly stable. We see this creeping a little bit higher, but again, nothing crazy. It's going to be right in that 5-year average. And then when you look at Europe, European floating storage has moved up. We expect it to be elevated, but some of this also to move onshore into onshore storage. So that's what we have for you today. Hopefully this was helpful. It's nice to be back and talking through some of the economics here, some of the different key benchmarks. And again, if you have any questions, you can find us in the comments section, find us on Twitter or email. And as always, we appreciate your time. Thanks for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.